Have you ever heard the economy is recovering, but your life doesn't feel any different? Prices are still high, rent isn't getting cheaper, and somehow, it still feels like you're falling behind. Meanwhile, the headlines say everything is improving. Markets are up, wages are rising, growth is back, so why doesn't it feel that way? Japan might be one of the clearest examples of this gap. On paper, the economy is recovering. But for many people, it doesn't feel real. So what's actually going on? We will look at real data, the stock market, wages, inflation, demographics, and more. And we will be honest about both sides. Because the real answer sits right in the middle. Some things are genuinely improving, and some serious problems remain. Both are true. To understand where Japan is now, you first need to know what it is recovering from. And that means going back 35 years. In the late 1980s, Japan was the envy of the world. Its economy was booming. Japanese companies were buying American skyscrapers and Hollywood studios. The Nikkei stock market was near 39,000 points. Then, in 1989 and 1990, the bubble burst. Stocks fell by 60%. Land values crashed. Banks were buried in bad loans. And Japan entered a long, slow economic stagnation. Economists called it the lost decade. Then it kept going, the lost 2 decades. Then 3. Wages barely moved. Prices barely moved. Everything just stalled. The core problem was deflation, falling prices. That sounds good, but it is actually a trap. When prices fall, people wait to buy things. Companies stop investing. Everyone just waits, and the economy freezes. By 2020, Japan's economy in real terms was roughly the same size as the mid-1990s. Wages and real purchasing power were lower than 30 years ago. That is the hole Japan is now trying to climb out of. Now the good news. In early 2024, Japan's Nikkei 225 stock index crossed 40,000 points for the first time ever, surpassing the 1989 bubble-era record after 35 years. That is genuinely remarkable. But why is the stock market rising? That matters. 2 main reasons: massive foreign investment, partly triggered by Warren Buffett investing in Japan in 2020, and real corporate governance reforms. Japan's companies had a bad habit of sitting on enormous piles of cash and doing nothing with it. The Tokyo Stock Exchange told companies, use your cash or face delisting pressure. That woke corporate Japan up. A rising stock market is good news. But, important, it does not automatically mean ordinary people's lives are getting better. Those are different things, and in Japan right now, they are pointing in different directions. Now wages, and here there is genuinely good news for the first time in a long time. In 2024, Japan's major companies agreed to wage increases of around 5%. The highest in 33 years. A real break from the pattern. But here is the problem. At the same time, inflation also rose, the highest in 40 years. Driven by the weak yen and global energy costs. If wages rise 5% but prices rise 4%, your real purchasing power only goes up 1%. Progress, but thin. In 2023, real wages in Japan were actually negative for most of the year. Inflation outpaced pay. Workers lost ground in real terms. 2024 was barely better, positive, but barely. Also important, the wage rises went mainly to big company workers. About 36% of Japan's workforce are non-regular workers, part-time, contract, temporary, and they did not benefit equally. The wage boom has not reached everyone. Now the yen. In 2022, the yen fell to its weakest level in 32 years, around 150 yen to $1. At some points in 2024 it touched 160. That is a massive shift, and it affects people very differently. For big exporters like Toyota and Sony, a weak yen is great. Their products get cheaper overseas. Profits boom. That is partly why corporate profits in the stock market are up. But for ordinary households, a weak yen makes imports expensive. Food, energy, and goods from abroad all cost more. This is why grocery bills rose and utility bills surged. Corporate profits went up, household budgets shrank. At the same time, in March 2024, the Bank of Japan raised interest rates for the first time in 17 years. This is huge. It means Japan believes inflation is here to stay, and the economy is finally strong enough to handle normal interest rates. But the Bank of Japan is walking a careful line. After the July 2024 rate hike, Japan's stock market had its worst single day in decades. The central bank quickly reassured markets it would go slowly. They are not fully confident either. Japan's near-zero rates also fueled the yen carry trade. Investors borrow yen cheaply, invested globally. When rates rose, that trade unwound fast, causing global market chaos in August 2024. Japan's monetary policy affects the whole world. Now the biggest shadow over everything, Demographics. Japan's population is shrinking fast. In 2023, it recorded its lowest ever birth rate. Over 800,000 people lost in net population decline in 1 year. By 2070, Japan could have 35 million fewer people. That means fewer workers, fewer consumers, fewer taxpayers, and more elderly to care for. Every economic indicator eventually runs into this wall. Japan's response: more robots. Japan is a world leader in automation and is pushing AI and robotics hard to replace shrinking human workforces. It's impressive, but it can't replace 35 million people. Japan has also historically opened up to immigration, quietly. Foreign workers hit a record 2 million in 2023. New visa categories are being created. But that's still less than 3% of the total workforce. Much more is needed. Tourism, one of the clearest bright spots. Japan welcomed a record 35 million foreign visitors in 2024. The weak yen makes Japan extraordinarily affordable. Tourism spending injected 8 trillion yen into the economy. But tourism has a shadow side: over-tourism. Kyoto residents are being priced out of their neighborhoods. Mount Fuji's most famous trail had to install a barrier to stop crowds. Some towns have banned tourists entirely. Also, tourist benefits are mostly concentrated in famous spots: Tokyo, Osaka, Kyoto. Many struggling rural areas see little of the boom. A packed Kyoto street does not fix a dying town in Akita. Japan's recovery is deeply uneven geographically. Tokyo is doing reasonably well, but travel 3 hours from Tokyo and you enter a different country. Schools are closing, hospitals are shutting, shops are gone. Japan has over 9 million empty homes called ikiya. Whole neighborhoods stand abandoned. In some rural areas, more than 20% of all homes are empty. The government tries incentive programs, cash, free land, with mixed results. One hopeful trend: remote work. Some urban Japanese are moving to the countryside for cheaper living and better quality of life. Small but growing. If remote work stays permanent, it could really help rural Japan. Let's quickly cover Abenomics, the economic strategy launched in 2012 that shaped everything since. It had 3 arrows: massive money printing, government spending, and structural reform. The first 2 arrows flew. Money printing and spending stabilized the economy. But the third arrow, actual structural reform, largely never arrived. The deep problems were papered over, not solved. The current government has made structural reform its priority. Corporate governance reform, immigration, gender equality in work, startup growth. Real progress in some areas, but still moving too slowly in others. So, the honest answer: is Japan's economy actually recovering? Yes, partially. The word partially carries a lot of weight here. The genuine positives: stock market at all-time highs. Highest wage growth in 33 years. Record tourism. Corporate governance improving. Bank of Japan confident enough to raise rates. Real foreign investment. These matter. The real cautions: real wages barely above inflation. Demographics still an existential challenge. Rural Japan still emptying. 36% of workers in non-regular jobs with no real path forward. Public debt the highest in the world. The recovery that exists is real for investors and big corporations. More tentative for regular workers in major cities. Largely invisible for rural communities, non-regular workers, and vulnerable populations. The best way to think about Japan's economy is not recovered or not, it is direction. And for the first time in 30 years, the direction is more genuinely forward. That is real. That matters. Whether this partial recovery becomes something real and lasting depends on choices Japan makes in the next 5 years. Not guaranteed, but for the first time in decades, there is reason to believe they might go right. So what does Japan actually need? 5 things. 1. Real wages must consistently beat inflation. Workers need to actually feel better off. Barely positive real wages are not enough. 2. Close the gap between regular and non-regular workers. 36% of the workforce in a lower pay, lower security tier is both an economic problem and a fairness problem. Real pathways out of non-regular work are needed. 3. Accelerate immigration, seriously. Japan needs more people. The IMF has estimated Japan could add significant GDP growth by fully integrating more workers. The pace is too slow. 4. Fully unleash women's economic participation. Japan ranks near the bottom of developed nations on workplace gender equality. Closing that gap could boost GDP by up to 9%. 9%. That is not small. 5. Actually deliver structural reform. Not just announce it. Japan has announced reforms many times. What it needs now is real implementation, in labor markets, education, deregulation, and corporate culture. There is also a real cultural shift happening, especially among younger Japanese. A generation that watched their parents give everything to one company is thinking differently. They want work-life balance. They are starting businesses. They are open to moving. Culture is changing. Japan's startup scene is genuinely growing. Venture capital is rising. Cities like Fukuoka are positioning as startup hubs. Japan has the creativity and technology to build something new. That momentum is real. Japan is also a preview for the world. South Korea, Germany, Italy, all face similar demographic pressures. What Japan learns about managing aging populations, automation, and immigration will matter globally. Let's bring it all together. Japan's economy in 2024 and 2025 is doing better than in 3 decades, in some real and measurable ways. Stock market at all-time highs. Highest wage growth in 33 years. Record tourism. Corporate Japan finally waking up. Bank of Japan exiting emergency policy. Real foreign investment. A growing startup culture. These are genuine. And yet the challenges are equally real. Demographics is an existential problem no policy fully addresses yet. Real wages barely positive. Rural Japan emptying. A third of the workforce in non-regular status. Public debt the highest in the developed world. Structural reform still too slow. The honest verdict, partial, uneven, fragile. But, for the first time in 30 years, genuinely forward. Japan has rebuilt itself from devastation before. It has the talent, the technology, and, increasingly, the willingness to change. The question is whether this generation commits fully. We will find out. Thank you for watching. If this gave you a clearer picture of Japan's economy, share it. See you next time.